Good morning, everyone, and thank you very much for joining me. This is the DAX Open. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. Today is Tuesday, the 16th of November, 2021. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. And here is our market commentaries disclaimer. And just finally, the chart reference we'll use is market scope, and I'll bring up the DAX chart. Just before we get into that, I want to run through the CNBC morning note, which reads as follows. European stocks are set for a muted open as investors wait for key economic data and to digest a slew of corporate earnings. Markets in Asia Pacific were mixed during Tuesday's trade as investors monitored virtual talks between Joe Biden and Xi Jinping. Stateside stock futures were flat in overnight pre-market deals as investors assessed a jump in yields, with inflation concerns continuing to weigh on global markets. Significant corporate earnings and economic data releases are expected later in the day. Back in Europe, tensions are escalating over Russia's alleged buildup of troops at the Ukrainian border, with NATO warning that it would be prepared to defend the sovereignty of Ukraine. Meanwhile, a migrant crisis at Belarus's borders with Poland, Latvia, and Lithuania has landed Minsk in the crosshairs of the European Union, with foreign ministers discussing a fresh round of sanctions against President Alexander Lukashenko and other entities. All right, geez, so that news all sounds very, very dark indeed. On the data front, UK employment and wage figures for September are due before the opening bell. Actually, the UK numbers are out, so let me see if I've got it here. I just want to, I didn't have this on the, references guide, but you can see that the inflation here is higher than forecast, which again, reiterates, I think, the Bank of England's position. They didn't hike 2 weeks back. They're likely going to hike in December, one would expect. 5.8%, and I think they're quite concerned about inflation. All right, just moving that down. Corporate earnings in Europe come from Imperial Brands, Vodafone, and Asda, amongst others. Bitcoin and other cryptocurrencies fell sharply on Tuesday, retreating from near record highs. Okay, so that's the news. Let's take a look at the DAX. Let's take this out. I think it's confusing the issue. Okay, so we're at all-time highs on the DAX. Yesterday we said we're in the midst of a bullish impulse move. That I think remains in place. The stochastic here is above 80, which is a strong area for momentum, and we're not overbought. So by and large, just like yesterday, I think the weekly has a bullish bias to it. The only point that I want to reiterate is that we still don't have the definition of trend. So I don't know when this leg is going to complete, but clearly, I mean, it's obvious, the further it goes on, the closer we're getting to the end of this impulse, that would lead into some sort of pullback. I think that pullback is ultimately healthy for the trend, and then I think that we'll see the next impulse. Now, clearly this is a huge assumption, but the reason I'm making that assumption is I think that conditions are still there for appreciation, and we want to see a higher trough followed by a higher peak. We want to see a higher trough followed by a higher peak, because that's the definition of an uptrend. Now, let's assume I'm wrong. Let's assume I'm wrong. Let's assume that we're actually going to head into a downtrend. Okay, so what would we need for that? Well, again, it comes down to definition. So something like this. So let's just say we do get into the pullback, and there's a rally, but the rally actually forms a lower peak, and then it shoots down. Well, that's the bearish case, because then we've got the lower peak followed by the lower trough. But again, you know, that is sort of just an illustration of what could happen. Ultimately, making forecasts are futile, because either you'll get lucky or you won't. I mean, it's like tossing a coin, except with worse probabilities. All right, so what we can say is that here is the last swing low, and here is the swing off of it. We identified the swing low, and it's moving off of that swing low, and we've got strong momentum. Now we go down to our daily chart, and yesterday's chart action, we drew this aqua horizontal in yesterday to give us the 3 conditions for a swing low on the daily. We got it. Okay, so here's condition 1, here's the lowest low. Here was actually condition 2, this one over here, but we need 3 conditions. With the third one is without it, you've got nothing. Yesterday we got the third condition, close above the reference candle's high. So we've got the 3 conditions for a swing low. In other words, there's now a better probability of a swing upwards. Okay, does it guarantee a swing upwards? Absolutely not. There's no guarantees here. But without this, we can't have a swing. So at least we've got the 3 conditions in place, and we've got a very strong momentum here. Now you can see right away something's happened here. We're overbought. Okay, so the stochastic doesn't give us an overbought reading, but the RSI does, and the RSI has gone overbought. So let's just bring up the legend here, and we're on 80.36. So anything above 80 is overbought. I'll just take that. So there is going to be some sort of correction at some stage. Now, it might not be today, it might not be tomorrow, but the point is the RSI doesn't spend a lot of time in excess. It's sort of the 80-20 rule, right? 80% of the time it's between 20 and 80 here. Only 20% of the time would it be between at extremes. And when I say 80-20, I mean that's just sort of a Pareto principle. It might be 90-10. I haven't done a calculation, but you can see it spends very, very little time. Okay, very little time in these excess areas, and we're there right now. So at some stage there will be some sort of normalization. How vicious will that normalization be? I'm not certain, but then it brings us back to the weekly chart, and if we get some sort of push down over here, I think that would be a time for us to actually be looking for opportunity, see if we can get in on the dips in the uptrend, right? Well, assuming this turns into an uptrend, of course. Now, with this overbought condition, then you must understand now that it will normalize at some stage. What does that mean for us as traders? Because we can't forecast. We know it will normalize at some stage. We don't know when. Well, we must recognize then that the risk-reward ratio is starting to skew against us. And you've got to ask yourself as a trader, because every one of us is different in terms of the amount of risk we are willing to tolerate. Am I willing to tolerate this amount of risk for the reward that I'm expecting? Okay, and that's if we were in normal areas, you know, the risk wouldn't be skewed, wouldn't have skewed it, but now it's skewed against taking the longs here. So just be aware of that. Now we'll go down to the hourly, and it's a real pity that we've gone overbought on the daily, because the hourly is looking pretty decent here. You can see that we have a you can see that we've got a crossover here on the exponential moving average. That's trigger 1, and trigger 2 would be needed to confirm that the DAX is bid. And then, of course, we wanted to move into the 80 area and hold. Okay, we wanted to move into the 80 area and hold. Must hold. That's where the swing will come from. We did get a swing here. We did get a swing here, and take a look at the stochastic. It was sort of in that 80 quintile. Not. It kind of oscillated above, below. So you can see when we hold these areas, that's where the momentum build is. So the way I think to approach this is to recognize that the daily chart is frothy. Then you ask yourself whether that has any bearing on whether you want to trade long or whether you want to trade short. If you're trading short, you're effectively what we call fading the trend, because it looks like by and large the sentiment is up. And then, of course, stop losses and money management, absolutely important, especially when you've got a skewed risk profile. So that is the difficulty with the DAX is in that, sorry, not that one, is this guy here, and it might take a few days. It might stay in here, and if it stays in here, we might get some nice upside. Okay, but just make sure you have your complete control over your stops. All right. Any questions? Please go ahead and type those through. Any questions? Please go ahead and type those through. Okay, nothing coming through, so I'm going to conclude here, and I will try and be available for the US Open this afternoon. I'll start working on the articles now, and hopefully if I can clear them, we should be okay. All right, guys, thank you very much for joining me, and speak to you guys soon. Thanks very much.